Hi guys, welcome to my channel. My name is Santiswa and welcome to Tech Shelter. On this channel we simplify tax for small businesses and individuals. So if there's something you into, if you want to learn more about tax in South Africa, then maybe subscribe and maybe hit the notification button or even like and share. Okay, all right, so today I am going to be talking about a tax directive. So what is this mysterious tax directive? Ooh. Okay, so what is a tax directive and when do you need to apply for one? Okay, that's what I'm going to be talking about today. Okay, so a tax directive is an instruction from SARS to your employer or fund manager telling them how much tax they should deduct for your own unique case, either from your salary or from your whatever amount that you're going to be receiving from the fund. So it's basically an instruction from SARS. Now, how do you get a tax directive? You need to apply for one. So you don't just magically have one. Unfortunately, you need to apply for one from SARS. So the reason for a tax directive to begin with is to make sure that you pay fair tax rates for your unique situation, especially whereby you are getting irregular amounts or you are getting an amount that you would not normally get if you were just working as an employee. Say for instance a severance benefits or a lump sum, etc. All of this will be dealt with later on in this video. So when should you apply for a tax directive, on where or when do you need a tax directive? There are many instances whereby you need a tax directive. I unfortunately cannot cover all of them. I will, however, mention just a few popular ones. One, you need a tax directive if you're a commission earner. So normally, tax is deducted on a monthly basis from each employer's income, right? That would be your pay as you earn. However, an assumption is made every month that your tax will remain the same for the whole year. In other words, if you are someone that earns a gross income of 25,000 rand, the assumption is that you will be earning a gross income of 25,000 rand for a whole 12 months. However, we all know that it's not the case with commission earners. Commission earners earn an irregular income. So one month it could be 25, the next month it could be 60, the next one it could be 10, the next one it could be 15. And therefore, to ensure that they are actually not taxed unfairly, because imagine this month you are taxed on 60k, that means that you'll be on a higher tax bracket, and then the next thing you are taxed on what, 15k, which means you are in a lower tax bracket. So to make sure that you are not taxed unfairly and that at least there's some kind of relief that is provided even for you, for your cash flow, then a tax directive is something that you can apply for in order to make sure that you know how much you're going to be taxed each month. And when you do this application, they look at what historically you have been earning. In other words, they look at the average of what you've been earning to decide on how much you should be taxed on or how much your tax should be. That's now for commission earner. Number two, you will need a tax directive when you have received what we call a severance benefit. So those two are some of the two popular tax directives that people normally apply for or need to apply for. Now, what are the different types of tax directives that are issued? One, the first one is called the gratuities tax directive. This tax directive you normally get when an employer pays an employee or pays the dependents or beneficiaries of that employee for either retirement, retrenchment, death, or for employees who are involved in the share schemes in the companies, 4 shares received. Number 2 is what we called a fixed percentage tax directive. This tax directive is the one that is issued to commission earners. This tax directive basically states the amount of tax that needs to be deducted from the commission earner's income, irrespective of what they are earning. So in other words, it is there to make sure that even if you earn 60 this month, or 15 or 5, a certain amount is deducted from your income, or a certain percentage is deducted from your income. The reason for this is because, one, if the tax directive is not used, which means then chances are the commission earner is going to be taxed unfairly. And the nice thing about this tax directive is that it uses historical information. So you can only, which then means that if you're a commission earner, you can only apply for a tax directive if you have historical information to use for the application. So if you're just starting out, unfortunately you can't apply for a tax directive, because SARS needs some kind of information to work with in order to decide what your tax deduction should be. That is it on tax directive. If you've learned something from this video, or if this is something that's helped you in any way, it would be nice for you to actually like the video, or maybe even subscribe to the channel if this is the type of content. Otherwise, please share with your friends and family. Thank you so much, and see you on my next video.